Going to move on to Daniel Satchkov. Daniel, are you there?
I'm here. How's the
Fantastic, Daniel.
sound? How's
It
the
sounds
sound? Good.
great. And tell us where you are. Tell us what you guys do. I'm actually going to launch a poll on FinTech, and we're going to publish it at the beginning of the FinTech panel so everybody will know where they stand. But give us your background and then get started. Okay, thanks.
Sure. I'm Daniel Sachkov. I'm a president of Rixtrema. We are a fintech firm, but a fintech in a specific space. Is the sound okay? I'm hearing an echo. Is all good?
There is a bit of an echo, yes,
Yeah. Well, okay. It's
but
gone, I
not
think.
so bad.
Uh, so we work in fintech, but we work in a very specific area of fintech. We work in the 401k space with qualified plan advisors and also with participants. So it's not as exciting as the last days of Facebook or Google. I will say this, great discussion. In 2018, I wrote an article for our blog called "Why Google's Days Are Numbered." Literally, you can Google for it. It is still to this day, 2 years on, and we write like 2 articles every week. It is still the most popular article on the website. I mean, seriously, it outranks every piece of content we ever did. It's just called "Why Google's Days Are Numbered." Uh, they're numbered for, I think, many reasons, but we'll see. We work in 401k, so not nearly as exciting as DeFi. My background, as I'm a math geek, I worked for many years in the quant side, working with top asset managers, building strategies. Over time, I got interested in going closer and working for people. You know, it's not. It's only so much interest to make another 100 million for somebody who has so many billions. So we turned to helping 401k plans and 401k participants. My colleague Jan Perullo, who was the CEO of our company, is going to be on the next panel. Me and him, we did a study a few years ago. It was 2016, I believe. We found that only on investment fund fees, if you only look at investment fund fees, 401k plan participants are fleeced to the tune of $14 billion per year. This is purely when they're overpaying for inferior funds, right? That's incredible number. Over time, actually, over the last 4 years, it's gotten a little bit better. But I do want to tell you today about the 401k space because I think it is the one of the great opportunities of the next decade. I'm very excited about decentralization. I do a lot of research also in blockchain and AI too. But I will say this sounds like boring and sleepy, 401k space. But I will tell you why it is massive and what we're seeing, right? We're in that space. We're not a big company, but we had really strong 2019 and especially 2020, and we came to realize certain things, right? First, I'll tell you some basic numbers, right? Throw out some numbers. So total 401k assets are $5.6 trillion, right? So it's a massive stash of assets. You can see that these 401k plans are sitting there, and a lot of the fintech doesn't go there. It's like the sunlight doesn't go there. If you believe it, if you hear all these developments in fintech, all these technologies, but if you actually look at what 401k participants use, sometimes it looks like something from 1990s, and I'm not even exaggerating, right? So average account balances have been steadily increasing over a decade. There's many reasons other than the Federal Reserve machine, but there's also demographics that obviously older people they have bigger balances. But what we see is in 2019, the last time I see the stat, the average account balance was over $100,000. That's the average, right? We have 180, almost 200,000 million 401k millionaires. So in this country, there are 200,000 people with $1 million in a 401k. If you think about what that represents, it's massive. But when you look at the technology that looks to serve that, it's actually not. Out of all of the brand names that you may know, I can probably come up with one that you really recognize that goes after the space. It's Betterment. They're trying to go into that space. There are others, but they're not kind of household names, at least. I don't know if Betterment is a household name, but I'm sure everybody on this call knows it. So it's underserved, it's massive, it's growing, and it's about to get bigger. Why is it about to get bigger? There are many reasons. First of all, Secure Act. You can, if you know about Secure Act, write in chat yes or no. It'd be interesting to know if you know about this legislation, specifically what it does, right? But I will tell you, Secure Act has massive implications because it provides for some amazing incentives to create 401k plans. Okay, great. So some people don't know about Secure Act. So Secure Act is a legislation that came into effect recently, and it provides for certain things. I'll give you the most salient points. It increases a tax credit for starting a 401k plan for a business from 500 to 5,000. This is not, believe me, for a small business in this day, in this environment, in this day and age, this is not a joke. This will incentivize a lot of people to start 401k plans. At the time, right now, only about 50% of workers have 401k plans. So with all these stats I told you, 200,000, millionaires, 401k millionaires, there's still lots of room to go. There's still lots of room to grow. And now all of a sudden we have like a perfect storm where there's legal environment that actually creates the incentive, right? There's also vastly simplified rules. A lot of the employers, right? We're a fintech company. We know this that a lot of the employers are wary of these plans because of the filing requirements and so on, but they have been simplified dramatically. They've been simplified to the tune that you can actually come together with other plans on a much looser framework. Before, you had something called multi-employer plans, and they were very popular. They were getting very popular. Now you have this PEPs, the new kind of plan where companies can come together arbitrarily to form one plan. They can file one form so all of the overhead is gone. And in fact, the biggest obstacle is now they don't carry fiduciary liability for one another. That's important because in the past, if you came together with other people, you share the fiduciary liability. And ERISA code, which governs that specific code, that is the strictest fiduciary standard, the strictest legal standard ever devised. You know, I don't know because you can basically lose your personal property. It actually transcends the corporate liability. So that was stopping people. That's gone right now. You're not sharing the liability. You're kind of responsible for your own stuff. There's also a $500 tax credit for auto enrollment. That's another big thing. In many companies, people don't enroll. They just forget to enroll or they're too lazy. Now there's a huge incentive to enroll. So you have a market that's already overflowing with cash. You open the floodgates to actually bring more cash into that kind of tent. Yet at the same time, what happens in that market, I will tell you, you probably all know of robo advisors, right? You all know robo advice is extremely cheap. That's a computer making trading decisions. They're very, very simple, both Wealthfront and Betterment. These are trivial things that managers on Wall Street, probably stopped using these models in the 80s that they're using. It's trivial for today's computers. Yet, um, in the 401k space, the same kinds of models sometimes charge 25 basis points. Okay, just so that you know, like a Wealthfront, I don't know what they charge, but it's got to be like 5 basis points. Okay, but they charge 25 basis points, and that's going to come to an end. That's come to an end partly because of the legal landscape. The other thing that, the previous panel touched on politics a little bit, but what I'll tell you is that we're very well familiar with regulatory landscape because 4 years ago when the DOL rule was implemented, there was so-called DOL fiduciary rule that was supposed to change the whole retirement industry. Uh, it was our research that was used by many of the organizations as part of the discussion, as part of the official record of deliberations in the Department of Labor. Then, when the Trump administration came in, they rolled back that DOL rule, so they kind of stopped the clock on that. But now it's all back in play. In fact, I strongly believe, and when I talk to people that I do know, they confirm this, that these rules are going to be very stringent. There's going to be sunlight shown on these 401k plans, and these 25 basis points fees, there's going to be no end to lawsuits. Same thing that happened with exorbitant fund fees 4 or 5 years ago is going to start happening to all other fees very soon. So to summarize, what do we have? We have a place that's overflowing with cash, close to $200,000 millionaires in that space, yet only half of people have 401k plans. Also, demographics and such are really favoring those plans. There's new legal landscape that gives incentives to create those plans, expand them. And you have a political situation where it's inevitable that there's going to be far stricter fiduciary requirements on these things. And a lot of the schemes are going in the past. What does that mean? Well, that means massive opportunity for fintech. And kind of that's what we're seeing for the past 2 years. Historically, we were these math geeks. We were content to work with quant teams, and that's all we cared about. But last couple of years, we started doing more and more in 401k space, and we had growth rates of like 30, 35% just with, Bootstrapped, which just kind of owned by ourselves. And we're seeing that 2021 and beyond, I think this decade will be very difficult in many ways. But in that particular space, I believe there's massive opportunity for fintech. So I want to invite you tomorrow at noon Eastern. We're holding a special founders debrief. Me and my colleague, we will expand on these trends. With Rixtrema also, we're looking for partners. We're doing fundraising right now. If you're interested in being part of that story, part of that decade where this 401k space will just go to the moon, I think, definitely contact us. My colleague Jan will be on the panel later. We'll send you the contact
You've got about
information.
5 more minutes. So can I just ask you a couple of questions before you get off?
5 more. Good. I thought I was done. Great. Sure.
And
Please.
maybe Jan can print out the link, which I think he just did.
Yeah.
Thank
Jan
you,
just put the link. Join that tomorrow. The session is free. Yeah. Go ahead, Marty.
Fantastic. Yeah. So where are you right now?
You won't be. I'm actually in Eastern Europe, and I'm in a country called Belarus.
So it really sounds like you're next door to me.
Well, I have good internet here. Yeah.
It's perfect. Yeah. So so you're because of COVID, you're locked down or just visiting?
Well, first of all, we have a lot of programs. I mean, we're an engineering company, so we build a lot of stuff, and I have a lot of engineers is this neck of the woods, and so I would shuttle back and forth because I can, right? Because I own the company. But after COVID, it became much harder to shuttle back and forth. So I'm content to be with my engineers. I have a farm, and I can do my math here, with no distractions.
Perfect. And you bootstrapped this company, right? I mean, there's friends and family who've invested. Can you give us some background on that and also what you're looking to raise?
Yeah, I can definitely tell you about that. So we've started as a very, like I told you, very niche quant shop. We're math geeks. That's all we did. I don't know if people on the call here know FactSet Research Systems. That is the company where we're all from. It's pretty big company. So I was a director of research at that company. My colleague Jan Perullo, he's the head of quant. So between us, we built out some major portions of the platform that made FactSet successful. And our other third co-founder, he's now retired, Bill Faulkner, he was the head of portfolio analytics. So we came with the mind that we're going to do the sophisticated math stuff, but we found something much more exciting over time, right? And we did bootstrap the company. We made decent money over there, so we had the money. We didn't need to raise money. We were content. But now we're raising money because I have never seen an opportunity of this size like we have in the 401k space.
Have you ever thought of partnering with another firm like Adipar, for example, that has a lot of family office technology? I'm not sure, or there seems to be many firms who you might be a great fit for their portfolio. I'm just saying.
Yeah, I mean, look, we already work with wealth managers. We have 7,000 advisor desktops. So if you think about what that means, you have this massive market that's about to be opened up, and we have 7,000 advisor desktops. In the country, there are a total of about 40,000 plan advisors. These are not typical advisors. So out of, let's say, 35,000 advisors, 7,000 are our clients, so that's 20% market share. If you think that these 7,000 advisors, each of them services, sometimes 30, 40 plans, sometimes more. Each of some of these plans have, 10,000 participants more. So through our access to the market, we already have access potentially to millions of these participants, so these 401k millionaires, and the market is opening up. So we're looking for an investment, right? The investment is, it's fairly sizable. It's 5 to 10 million, but the opportunity is huge. If you go to the session tomorrow, we will explain to you how it's going to work, elaborate on why this is you cannot miss this. There's a lot of sexy things. 401k market doesn't seem so sexy, but believe me, it is.
I think your point about, transparency on fees is really a driver in a lot of fintech, because everywhere, I get a lot of fintech deals that come to me and they all push that. So that's really great. Dan, I got to get to the next panel, but thanks so much. Really fantastic.
Thank you.
And I recommend that anybody who has the time, our opportunity, log in to tomorrow's podcast on with just more details.
It was a live video session.
The opportunity. I'm sorry, live video session. So next up is